Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's Monday, and feels like the market doesn't really love Mondays. I guess a lot goes on over the weekend, or it seems as oil doesn't like Mondays, and when the market notices oil breaking the threshold, it kind of notices as well. So with that being said, we've talked about the impact on oil. Do we think that at some point lower oil will be good for the consumer and it'll go into the economy? Yes, but right now it's all psychological. That's how markets trade. They trade on psychology. And 47 and change was the last threshold that was support, and then once you get below it, you never know where it's going to go. And then everyone starts talking about disinflation and what does this mean, and and then people raise some cash, and rightly so. It's still only like the second week of January. No one's allocating big funds when they're not exactly sure when oil will bottom, what earnings season is going to be like, and we're still only not even 3% off the historic high. So with that being said, you have to judge things every few days. What I wanted to do is I wanted to judge this last V bottom. We've talked about V bottoms in the past. Typically last year, no one talked about the V bottom until it was like 2-3 weeks after, not 2-3 days after. So maybe too many people were talking about it, so it can't happen that way. So what we were judging is the strength of the market based on Thursday's gap. Do we hold it? Do we not hold it? How can we measure composure? And if you look here at the chart of the spiders, you will see that at this particular point, yes, on Friday, it came back, okay, to come in the spiders, come in a little bit. So right here on Friday, this bar looked a little bit different than the past few V bottoms, right? On this V bottom right here into the October lows, it cleared this pivot, had 2 strong days, a big gap, never came back to test it. Another big gap right here, never came in. This one, they pushed through, and it lasted for half a day, and we followed the 8-day the entire way. On this V bottom, which was in December, okay, you had your up day, gap up, which was your second day. Did it come back in? Did it even test it? No. And then you had your slow grind into the year end before your breakout failure at 2,079. So right here on this day, I'm like, you had your first green day after holding the 100-day again. So I was long into Thursday. And then on Friday with the good jobs number, I'm like, you know what, maybe we get a good digestion day like we've had in the past, and then we trend higher. Digestion, trend higher. Here, you had a lot more volatility than usual, so that had me go out with only like 2 positions versus a normal 5, 6, or 7, and after a potential V bottom. And then today, that happened. So at this particular point, what does it mean? It just means that the market wasn't strong enough, to hold higher, so to speak. And now we're back below the 8 and 21 day. And some, by the way, this is an out-of-sequence trade, are pointing to the fact that this could be, a bit of a head and shoulders formation in the midst of forming, which takes a little time. And you now have a right shoulder being formed, okay, whereas, here's your high, here's a lower high. And now the question is, does this area hold? And at this point, you don't know. Okay, you have today's low to trade versus, which is 201.92, and we'll see what happens next. We'll see how we open up tomorrow. But these 2 candles, combined with everything else out there, should not have you, cajones to the wall bullish. And if you look at behind me, the oil fields, the supply, all the talk. The bottom line is, I was on Fox Business, and guys thought oil looked cheap at 70. Then they thought it looked cheap at 60. Then at 55, you never know. You don't play the cost average game because you could blow up. If you try to level versus level, maybe you have some paper cuts, and at some point, we'll put a spike low in, we'll hold sideways, and we'll get away from there. And that will be your tradable low, and then you'll see maybe the XLE and the OAHs and all those guys holding up. If you go take a look at the chart of the SPX, you could also draw somewhat of a wedge here. Okay, so I marked up all the spiders, so I feel like I'm going to be lazy and not, redo that. So here is this, there is that. So basically, you got to hold around here. Otherwise, this wedge type pattern, which also looks like a head and shoulders pattern, could break and resolve to the downside. Alcoa came out after the close, was up a little bit. We'll see what happens tomorrow. But ultimately, we're wedging in here. What's a wedge? A pattern of indecision, because the market doesn't know if it wants to resume to the upside or go down to the downside. So in this area, you wait for the market to confirm it. You look at the Qs. What did it do? Did it hold its gap? No. Filled the gap, so you're not seeing outer performance in the Qs. So this still also needs some time here to figure out what's next. The financials, which have been leading us lower, really, the financials, by the way, filled the gap, okay, on Friday, which is the reason why I was holding some Bank of America. I'm like, I'm not going to hold the Bank of America. If this is the first one to fill its gap below all the moving averages, why am I going to stay there? And then you had your extra follow through, so you could save yourself some money. Now it's below all the moving averages, so we'll see what kind of earnings we get later this week. That'll be a telltale if the XLF bounces off a big support or breaks below it. It's going to be hard for the market to hold up if the banks get pressured after being, a relative underperformer. What did the IWMs do today? It, tiny bit better because, it filled the gap and came back up a little bit. I guess it's got the least exposure to, overseas in oil, but at this point, we'll see what happens here. All these things kind of have, these wedge-type patterns where, at this point, we're not sure which way it resolves. You could say that, you do have oil at 2009 lows and the S&P is 4% off the high, so taking it in stride. Market's taking that in stride because back then the S&P was down below 700 or so before that box, the bottom off of 6666. And then you go to high beta tech. Laz has been all over these names, and I actually gave him some crap, and I feel sorry about it. When we had that bottom last week, I'm like, Laz, you got to put some longs on off the charts, and he's like, okay, Red Dog, give me some longs, and I'll put the parameters. He's like, we're very, very specific. I give the entry, the exit. 2 different exits, the risk reward. You can't just say, but put some longs on what really looks good. I'm like, I don't know. Apple looked good at 109.43. I mean, 10, whatever it was, 107.43. He's like, well, name another stock, and there really wasn't that many of them. That was right here. And now, Apple, it doesn't look bad, but it failed at this little descending channel here. We had that trade, that red dog reversal right there, and then I would think that most people, actively, if you wanted to see it hold higher, that would have been your stop. Now we'll see what happens tomorrow. We'll just see if we get a red dog reversal around 108.80. Doesn't, for the overall market, doesn't look compelling enough for me to just sit in things. And right now, it failed at the top end of the range the same way it held the bottom end of the range. Now who knows if it's going to come back here? There was some news out there that Facebook was looking to invest some money in that, the Chinese handheld device holder in Asia that I see some news about that's really making crossroads. So I don't know if that was a reason why also because of more competition. I'm not going to look too far into it, but just listen up for Facebook and Xiaomi. I don't even know how to pronounce it. I'm sorry. Xiomi something, something, something. But anyway, Apple failed at resistance, and now, we'll see what it does tomorrow to see if it holds the upper end of the range. It goes back down to the bottom. Oh, so now the weaker ones. Google. What's this telling us? Below every moving average. Nothing compelling here, okay? What's Amazon telling us? Below every moving average. It's been below it for a while and still weak. Some people actually made some money probably shorting it in here. It changed. Remember that Cyber Monday when I'm like, oh, this small, you can trade these actively. This one it broke to the upside. They sold Cyber Monday and then came in, tried to go again, put in a much lower high on this. Look at this outside day reversal right there, and now it's breaking down. And if you could sit and short these things, congratulations, you're making a lot of money. That's not my strength. Tesla also been below every moving average. We love to trade this name when it's doing something like this, following the 8 and 21 day, pent up, going nuts. Then remember, it broke that 8 and 21 day right here, did it again, and now it's it's kind of just sitting out of play, and not much to be said here. Okay, it's trying to hold a little bit, and it's broken a lot of trends here. Look at this trend line. That's when it broke that one. A lot of guys talked about the Head and Shoulders top here. So there's just it's on the right side of all the trend lines. So that means in a momentum name that's priced for perfection, that is a ginormous PE, that's a concept play. You don't sit long this when it's below everything. You wait for something to change. You do see some names like that in pharma and bios. Sperling was holding on to this Juno today, and doesn't this look different? I wish there were some tech IPOs that look like this, but there's not. Here was your first 5 days, took off, came in, consolidated, curled up, and went again. Look at that move. That's gorgeous. If you were in there, great. Kite. Let's see what that did today. Still trending. Look at this thing. This thing looks like, Tesla when it went from 60 to 180. This one's been following the 8 and 21 day with lots of buyable patterns that guys are following on the VTF. Unfortunately, I'm not very involved in pharma and bios because I don't like to hold these things overnight because I don't do all my research on dates and times and data and this and that, so I don't just sit there. But anyway, this one's been trending above the 8-day and 21-day, and what a move, okay? I wish there was, again, patterns like this in tech or high beta tech or even just some of the sectors that I follow. You know, we follow these, but you know, you got to move and groove. The bigger ones look a little bit wishy-washy. You know, that I feel a little bit better trading those, but this BIIB broke out, came back in, so not ready yet. What did Celgene do today? There was some news there. Yeah, this looks pretty good. Maybe, you know, keep this on the radar. Let's see, what did Gill do today? It filled the gap. It probably needs a little bit of time. Maybe it pulls into here and then goes again. Oh, you know what? Today we posted the chart of gold. You know, we've been talking about how it's been changing and acting better. Last week when the market rallied, it didn't fall apart. You have this, you know, what's it called, inverse head and shoulders pattern that I posted the chart, and you know, it broke above it. You know, you could have bought this thing today around 117 and change, and now it's getting close to the 200-day. So I'd be a bit careful. But remember this pattern here? It's been a choppy mess since, but you know, now it's, you know, if you stuck with the trade, congratulations. Metals have been a little different. Look how battered and bruised they've been all the way from here down to there. So maybe there's a little bit more room. So just don't blindly short. But again, much more to prove, you know, to buy some strength. So hopefully you sold a little bit today. GDX, same thing. We talked about this breaking of the downtrend, and it broke the downtrend and, you know, flagged higher, and now it touched the 200-day. So we'll see what happens there. In my Redler thesis for 2015, I talked about cyber software stock and security stocks, and FireEye, big time winner so far. You know, the reason why I liked it is because remember how hot this one was, you know, from the new issue, following the 8-day and 21-day, and then it changed right here. They did so many botched, you know, secondaries and whatever, and fell apart. Well, someone was accumulating it down here for a while. So now finally, you know, it gave you some nice action. This was day one when it woke up. I think this is when I was long it. Unfortunately, I didn't stay with it as like I would have liked to, and here was your follow-through. I do think the CYBR has the potential of going again. This is when it came in public. Here was your move number one, really nice earnings. Move number two, and then it needed time to consolidate. Today it did a red dog reversal, and at some point I would think you have one resistance there, and then if it were to clear this 3850, you know, you would think that it can get going. You know, no memories, nice trend, under accumulation. It seems like the growth is there, right spot. So this and FireEye were my two focuses from the 2015 thesis, and maybe this goes. Some people were pointing to Cisco. That actually was one of them too. This is, I said, my mega cop. You know, I looked at the weekly chart of Cisco, and I'm like, this hasn't done a lot. You know, this hasn't done anything in a while. It looks kind of like Microsoft when I put that in there last year, where why can't Cisco get to here? Okay, which would be a nice gain. It's already somewhat on its way, and who knows? You know, if we were in a bull market at some point, it could go into the 40s. Intel, you know, already broke out and did a portion of that. Okay, which I think Intel also should still be fine, and you know, got close to the 40. I think I put 42 in my note, and Microsoft went well above. That was last year's focus. And the reason being is not because I love the Xbox, not because, you know, I think that their search engine is awesome. I did it because look at the size of this channel. Hold on. You know, under accumulation for a heck of a long time. And this was the breakout price right there. Retest, and now look. It's already back almost up to the middle of that range. So, you know, I did Microsoft last year. I looked at Intel. I have Intel on there still, but Cisco, I think, could be the one where the sentiment's against, and it's been, you know, sideways enough where something maybe you tuck away. Anyway, so with all that said, you know, it's been a volatile start to the year where I don't think even the pros, I think we're all pros, right? I'm not exactly sure what's going to happen next. On last week when we had the reversal and we had the gap up Thursday, in my head I'm like, you know what, there's a 70% chance that that was the January lows. Then on Friday, when we were like a little wishy-washy, we didn't really consolidate well with a good jobs number, I'm like, maybe 60% sure that that was the January lows. And then after today, now I'm like 50-50, where this morning I was negative to positive, now I'm, you know, neutral to positive, now I'm neutral to negative, where I'm just going to wait and see. Don't need to be a hero. Plus, there's moves every day where you could find some cash flow. Twitter has been a great 2015 play so far. And then some people yelling at me because they're like, oh, it reversed. You pumped it at the end of the day. I'm like, I didn't pump it at the end of the day. I said it's been acting well in 2015. Here's when it started 2015. It broke above 37. Here's when you had a nice relative strength play on Friday. And then here is where it pushed through 40.34. So anyone who was short probably had a cover. Anyone thinking it's going to get up to here got long and reversed. That's a small red dog reversal after a move from about 36 or even 37. So a small little sell signal or reduce. If you were in tier 1 here and went to tier 2 here, maybe you went back to tier 1 here. And then you'll see what happens if this new trend kind of continues, which I do think it's in the game to do. So don't just be upset. Also, there was some clues or some news that Twitter went down. So, with the whole terrorist ISIS scenario. So maybe that caused a reversal. But all in all, this was a small sell signal with a stock that went, what percentage-wise, from 36 to 40, pretty big. I remember when I, had, Apple bullish glasses on here, when Apple, was a good trade here. We got involved long. I was watching it consolidate, and, it wound up being a tier 2 here. And then all of a sudden, in this little reversal, I didn't even really see it. It was a tiny, small red dog reversal. I remember because it pushed through that day, 114.52, and then, went as high as 114.77 and then closed at 113.90. So small little, signal to take some off considering where it came from. We were all watching it from here, not even realizing a week before it came from there. And some people bought it the whole way down and got stopped out right here on this day. Okay? And then finally, down here, it became a little bit of a buy signal, and then you had to move back up. But if you didn't sell any here and you bought more here, you probably got stopped out here or here and then said, I don't want to look at Apple because of it's there. So red dog reversal there, red dog reversal there, and now we got to wait and see. So I don't want to see that happen to you with Twitter where, all of a sudden, you bought more and then now you're buying it the whole way down and you can't handle it. This little pattern here, you never know what it's going to lead to because we're a bit extended. So just, keep that in the back of your mind. And Facebook, at this point, I would be neutral. Again, I tried to make money here on this day. Okay, then on Friday it didn't go, and then when it went back below this low, okay, Friday's low 77.20, I sold it. And now, I don't know. Look at this trend line here. Granted, shorting on this trend line hasn't really worked, but it is vulnerable. You have a lower high here. It was down 10 days in a row, didn't rally with the market. So I'd be a little careful here with Facebook. And that's why I'm not in Facebook overnight. So you try things, and then if they fail, you get out of the way. And usually when I get out of the way because it fails, people can make money short. At this point, you don't know. We'll see what happens in the next day or so. So hopefully today, you came in with some risk down. I did tweet saying low gross, low net on Friday because I was kind of neutral on this V-bottom feeling different. Today, you had some downside. You had to be short quick. Once those levels broke, you had to be there in the first 20 minutes, or you had to have stops in some of your names in those first 20 minutes, and then the rest of the day was kind of noisy. You had some, some trades in, your FireEye and even Cyber and some other things, and you had ranges, but, the action was quick, and unfortunately that's what happens, is lately you get that quick down move, and then goes sideways, and hopefully you'd want another down move, but you don't get that follow through. Same way if you miss that up move, it goes sideways, and then it just chops and doesn't give you that. So you have to almost be prepared with levels, for whatever it is you're looking to see. And if the market confirms it, you act fast. And today's only Monday. We have another day tomorrow. We'll watch oil. We'll watch the levels. We'll watch different stocks. And we'll continue to go. And we got earnings season starting. So there will be a lot of trading to look at and analyze and go with. Have a good night.